John Meuret from Meuret Grain Company is our market analyst this week. We talked with John Wednesday afternoon about selling strategies for corn and soybeans, the Federal Reserve's thoughts on interest rates, and the recent strength in the U.S. dollar.
Jeff, we haven't seen the move in the dollar like this in a long time, and I think we're at 12 or 13-year highs. The last time we had the dollar at these levels, corn was $2.30 and beans were $5, and so while the impact isn't immediate, it will be felt long term. So certainly something to keep an eye on going forward here.
What's the effect on exports right now?
Well, we've seasonally will always slow down on soybean exports this time of year, and then corn slowly picks up. We're seeing that activity today. Anytime you start looking at currency moves, it takes a lot longer to see the effects in the export markets. So.
But corn has been strong, yes, in the export scene,
yes.
Correct? Because?
Part of it's seasonal. I mean, we've got export capacity as these exporters wind down their bean loadings. They step back in and want to do something. You know, they don't want to take the next 6-7 months off, and so they're aggressive to sell corn. You know, there's some business we put on, and we need to. If we're going to export, 1.7 billion, we need to get to work at it. So
you mentioned the soybean export slowing down largely because of what's happening in South America. Do you have a sense of how big that crop is, or how big the market thinks that crop is?
It's a good question, and Brazil's trimmed back their forecast just a little bit from the northeast corner. Argentina is actually going to offset that plus some. They've had really good weather, so they've got an ample crop. The question still remains, when do they sell it? And the Argentine farmer has been able to hold them. You've seen the stories about the soybeans in bags. Eventually he has to go to market, and if he has this big of a crop, he's going to be forced to sell. So you
saw those stories on Market Journal, right? That's
of course,
the media you're referring to. Ethanol. Tell me where ethanol stands right now with how crude oil is still impacting it.
Well, I think ethanol's hanging in there. Margins are certainly tighter than they were a year ago. Currently, they can make a little bit of money, especially in Nebraska here. The offset happens to be the wet feed. Going forward's a question mark. We know we've got good stocks. We can probably export a little bit of ethanol. So the plants will stay running, Jeff, but probably not to the speed they were a year ago.
The stocks are still incredibly high, though. Yes.
Yes.
Tell me what the Fed decided. We're talking on Wednesday. The Fed has made a decision on what they're going to do with interest rates. They say what?
They're going to leave them unchanged until June. And so the market, I think, was leaning that direction. And so, after that report, I don't know that there's much difference. Soybeans and corn closed right after that report. Not a lot of impact there. So
update me on where basis is in your area of northeast Nebraska.
Basis is incredibly quiet, Jeff. We saw soybean basis pop a little bit after the first of the year and then quietly drift back down to more seasonal levels. Corn is really the same thing. We've had beautiful weather for about the last 10 days. That helps the farmer move the trucks down the road. So both of them, I would say, are about average, 20 to 30 under on the soybeans, and corn about in the same types of levels in northern Nebraska.
So what excites the corn market right now? It seems like it's been in this low. What makes it move?
Yeah, I think we're going to have to get a story, Jeff. And we look at beans. We hitched our wagon to the soybeans, and that crop has done well in South America. And so now we've got to find a new story. So I think that's part of the corn market's trouble is, where are they going to hitch their wagon to? It's not going to be ethanol. We just talked about that. Probably not exports to a degree bigger than 100 or 200 million more bushels. So we have a problem. And when we have a gap now of information where there's really nothing new coming at us for about 30 days.
Do you have any targets that you're looking at old crop where you say for either corn or soybeans this is attractive, or based on what's happened this could be attractive?
Well, I think you have to adjust your sights on the corn, and I've been friendly corn myself, but as beans get tucked away and we continue to take that market lower, it becomes challenging for corn to move up on its own. So I think a guy needs to look real hard at $4 in the corn again, and when it gets there I think you have to sell. But I continue to think soybeans get closer to $8 than they do 10. So if my prediction's right on the soybeans, corn will be a sell if we can get to $4.
And 2015, what about that crop?
I think you've got to take the same approach that we talked about in the old crop. At the same time you're cleaning up old crop sales, reach to the new crop and sell some of those as well. So
for 2015 plantings, what is your assumption of what farmers will plant?
I think, Jeff, we're going to see more beans, and that's been a very popular idea the last 3 months. But the farmer's fed up with fertilizer prices. He's fed up with the input costs in general. I think he's going to kind of pull his head down in his shell and say, I'm going to do some soybeans. So we're starting to see that effects. I would expect that in North Dakota, South Dakota, and western Nebraska, these fringe areas will start to cut back corn production in a pretty big way.